All right, hey, what's going on? This is Dan Keller, your mortgage advisor at Guild Mortgage. I want to welcome you to another episode of Making Sense of the Markets. Today is Friday, October 27th, episode number 44. 44 weeks in a row, I've come to you with a market update and some valuable information that you can use or that you can share. This week, I'm going to talk with you about the zero down loan programs that are available right now in today's market to you, the consumer. But I'm going to talk about two things. One, the big difference between the 2001 and 2002 zero down home loans that may have contributed to the housing crash and today's zero down home loans. There's a big difference, and most oftentimes the consumers don't really understand the differences between those two. So I'm going to talk about that. The other thing I'm going to talk about is something that I do differently in my office as it relates to educating my borrowers when they are purchasing with zero down. You're going to want to pay close attention to that. If you're a real estate agent or a consumer, this is something that will add massive value to your business if you're an agent, or if you're a consumer, to your home loan experience and journey of homeownership. So before I get into that though, I want to talk about the market. I want to give kind of a weekly recap because something really big happened in the markets this last week. For the first time since March, we saw a trend reversal. Rates actually went up this last week. They went up pretty quickly. That's the bad news. The good news is yesterday on Thursday and today, we hit a floor of support and the market started to improve. So what that means, you guys, is that we've kind of hit that floor of support for now. Now down below today's, the floor that I drew, or the floor that you'll see, is a red line. If the bond market comes close to touching that red line and touches that red line, it will be a good indicator that rates could get pretty ugly in 2018. So I will keep you posted. So for now, let's talk about the three zero down loan programs, the three most common loan programs that I sell. Number one is the VA home loan. So if you've served in the armed forces or are actively serving in the armed forces, you may be eligible for a VA home loan. Zero down, no monthly private mortgage insurance, and get this, a below market 30-year fixed rate. This is an incredible opportunity for someone to purchase a home with very, very low costs. So if you've served or are actively serving or know someone that has, do me a favor. Down below this video, you're going to find a link to my VA concierge page. I want you to share that or check out that information. Tons of information that I put on one page that literally will walk you through the VA home loan experience, how to apply, how to qualify. Everything you need to know is right there. Number two, the second most common zero down loan program is the USDA home loan. This is a great resource for first-time home buyers that meet two criteria. One, make under $103,000 a year. So there are annual maximum income caps for this loan program. Family of four has to earn less than $103,000 in King County or Snohomish County in order to qualify. The second factor is it has to be in a USDA eligible area. So again, somewhere around this video, you are going to find a link to my USDA concierge page. Again, all the information that you need on this loan program is right there. And again, these two loan programs have gone under a lot of regulation changes over the last few years. It's important that you're working with a professional that funds a high volume of these loans so that they're in tune with some of these changes. Some have been for the better and some have been for the worse, and it's important that you need to know that you have access to that as a consumer and as a real estate agent. All that information is in those two links below. The third most common program is the Washington State Housing and Finance Commission Home Vantage program. Essentially, this is a 4% grant to be applied toward an FHA loan or a conventional loan programs toward the down payment or closing costs of either one of those loan programs. Great option. It's higher cost than the USDA or VA loan. That's why I rank it number 3. But again, somewhere around this video, you'll find some information on that loan program. So listen, if you're a real estate agent, I want to be your mortgage guy. If you are a consumer, I want to help you. Somewhere on this screen, you're going to find my contact information into my office. I want you to call me. I want to set up a mortgage planning meeting, and I want to go over your goals. I want to go over which loan program fits you best, and articulate a clear plan to you getting out into the marketplace and purchasing a home. If you have any questions, let me know. I look forward to connecting with you next Friday. Have a great weekend, and bye for now.